Hi, everybody. It's Dr. Robinson with the October 21, 2022 update. My contact information there is on the screen if you have any questions for me about anything on the slides or any other generic questions you might have for me. Send me a note and I'll be happy to answer it. Having said that, let's get on with our meeting. So the itinerary for the week, pretty simple. We're going to talk about our financials as we always do, and then a minor market update. Not a whole lot to talk about. The market's in a lot of flux right now. So many things going on. There's not any one thing kind of driving the market. It's just a combination of different things. But we can talk about that at some other time. Financials for the week. Overall, pretty. I think of it as a mediocre week, but still a good week all in all. Our starting NAV on 10/14 was 21.56. We gained 71 cents for the week. Our ending NAV ended at $22.27. So the total weekly gain for the account, 3.29%. So I'm going to round it to 3.3% for the week. All in all, pretty good week. Was hoping for better numbers, but did had a couple of stumbling blocks along the way this week. Trading was a little bit choppy this week. Had some good days and had a couple of days that were a little below average. But all in all, 3.34% for the week. Pretty happy with it, given the nature of the market. The market is volatile, by the way, guys. So it's probably going to be this way for a while. We did have some news come out today. Haven't been able to confirm it from anybody because it was just somebody called themselves the mouthpiece of the Fed, and I'm not sure who that is or why this person is speaking for the Fed. Normally, Jerome Powell speaks for the Fed, but the mouthpiece came out and said that there may be a pivot coming in December, so there may be a change to the trajectory of interest rates coming in December. Remember, we do have a meeting still coming up in November. November 2nd is the announcement. So we're still expecting 75 basis points. But I've kind of alluded in the past, the Fed was pretty adamant a few months ago that they would do 75 basis points in November and then probably go to, say, 50 basis points in December. I think that's the pivot they're talking about, that this person today announced at about 9 o'clock this morning that there was going to be a pivot. I think that's the pivot, but I don't have any way to know that. And the market acted as if the pivot meant that the Fed was no longer going to raise interest rates going into December. I don't read it that way, but we've got time before we have to or be prepared for it in any event. But I think somebody's or the market is kind of maybe a little hopium going on where they think that this pivot is going to be bigger than what it is. I think it's just going to be a change from 75 basis points down to 50 basis points. And we're probably going to see another 25 to 50 basis points in January, February of next year. But at the end of the day, we'll kind of know more as time goes on. But the market reacted to that news today very strongly. Market had a really big update today, and it was all based on those comments. We'll just need more time to know whether those comments are actually from the Fed or if it's just somebody, I don't want to say manipulating the market. I don't think anybody would do that. But at the end of the day, who knows? So we'll keep our eye on it. But the market has been a little bit volatile lately. It's big up days, big down days. And some days it's hard to know what's driving the market and which way the market wants to go, especially early in the morning. But in any event, 3.3% for the week, pretty good week. I haven't told you guys, but for the last couple of weeks, I have been carrying a Strangle. We've had some money on the sidelines. With all the volatility, I haven't been wanting to trade on a daily basis all of our money. So I kind of went back to our old school method of just carrying a bunch on a Strangle. So we do have a Strangle going on. So remember, a Strangle just simply means we've taken both sides of the position. We took calls and puts. And Strangles work well when you give it time to have the market go either up or down. So in a Strangle, we don't care which way the market goes. We just want it to go one way or the other. So it has been doing that. So it is an unrealized gain, by the way. So we can't add it to my books. I can't add it to our profits because it's not an actual profit yet. There's profit in there, but we can't credit that to our books. So it is kind of a separate entry on our books. So it's an unrealized gain. So we're fully invested. The Strangle remains positive. The calls are in the money. ITM stands for in the money by 94 cents. Puts are in the money by $1.64. So our puts have done a little bit better. I suspect that that's probably going to change again if, depending on whether this information we've gotten from the mouthpiece of the Fed, whoever that is, if that is correct, we'll probably see the market want to trend up pretty hard over the next week, 2 weeks until the Fed hearing or meeting in November, on November 2nd. And remember, once we get those numbers from November 2nd, we also get an opinion by the Fed, and the Fed can kind of blow out of the water any idea that or any hope for people that the Fed is going to reduce interest rate increases going forward. But we'll let that play out until then. So I assume that over the next couple of weeks, we're probably going to see our calls go a little higher. Our puts are probably going to go a little lower. But at the end of the day, we're still positive on both sides. So it doesn't really matter to us. As the calls go up, the puts will go down. They pretty much offset each other dollar for dollar. So we're in a pretty good shape on those right now. Our net unrealized gain right now is $118,000. So we've got $118,000 of profit sitting out there. We can't add them to our books yet, but they are there. And over time, we'll as I adjust those that Strangle over time, we'll book some of those profits on one side or the other, depending on which way it goes as time goes on. But we do have an unrealized gain out there. I didn't mention this, and one of the things that make you guys realize is since we are fully invested, please be mindful of or that distributions need about 2 weeks to process. Now, I have set aside some money. I have kept enough money in the corporate checking account to cover any distributions that people need. I know there's 2 or 3 right now that are kind of on my desk processing. I'll be doing those in the next couple of days, actually sooner than that. But I do want you to know if I get any new requests for distributions, it can take up to 2 weeks for me to process that, simply because since we're in a strangle, I want to make sure we exit the strangle in an appropriate way. For example, if the market has been doing well, I want to get out. I'll take distribution from the call side because that's where the most profit would be, not take as much money out of the put side. The reverse would be also possible if the market starts to tank for whatever reason. If the market goes down, any distributions that we take would come out of the put and not the calls. So just be mindful of that so that I can time it to the best that we can. We can't ever perfectly time anything, but I can time the distributions as much as I can in a way that benefits the club and our accounts and stuff. Right. So I just wanted to make sure that. So it can take up to 2 weeks or so for a distribution. If you've already told me about a distribution, by the way, and by the way, any new contributions to the plans, I've got some people adding more money to the accounts as well. That money potentially would go into the Strangle. Not all of it, by the way. For some, I trade more actively, especially if you're a paid client. We'll trade that more actively than anything else. But keep in mind, I will need some time to process things when it comes to distributions. The only other thing I think I had for the week was just again some more market volatility here. We've been following the bonds. Bonds had spiked for a little bit. They came back down a little bit today. They came back down in response to that comment that the Fed may be done raising rates by December. And I shouldn't say done, but there might be a pivot point. A lot of people are talking about a pivot point where the Fed starts to slow down the increases in interest rate increases. If we're there, that might explain some things, but interest rates did come down a little bit, but you can still see that they're very high overall. So the 1-year Treasury is up 10.8 bips over the last week. We did see a decrease in the 2-year, though. That's the first one we've seen in a while. So we've seen a 1.3 bips decrease in the 2-year bond, went from 4.496 down to 4.483. 3 years up 2.4 bips, 5-year up 8.5 or almost 9 bips, 13.6 bips on the 7-year, 21 bips on the 10-year. That's the big one. That's the one we've been watching a lot. That bond is at uh, highs that we haven't seen in a very long time, a decade, more than a decade or so. So at the end of the day, we're starting to see the 10-year really come up. And I think if that continues to do that, I think the Fed will have to, in December, maybe have to do a pivot. We don't want to see that thing getting into the fives and sixes. And not that I think it's going to happen in the next month or so, but if it did, it could really slow down the economy in a meaningful way. Remember, the 10-year bond is where we get our mortgage interest rate. So you generally add 3 points on average to the 10-year. That gives you your mortgage rate. You can see the mortgage rates up in the top left, by the way. I did update them for the week. So a 30-year mortgage right now at 7.2, 15-year at 6.43. So that 10-year yield, if you add roughly 300 basis points to that number, you get right around where the mortgage rate is at. But if that starts to get to say 5%, then you're looking at mortgage rates of 8. If it gets to 6%, of course, you're looking at 9 points or nine percentage points on a mortgage, and that would decimate the real estate industry. So I think the Fed will have to kind of do something as this 10-year yield starts to rise or continues to rise. I don't think it's going to rise too much more than this, especially if there is any hope for people to think that maybe the Fed is going to start doing some or make some changes in January, or I'm sorry, in December. But again, we'll have to wait and see what the Fed is going to do. We're not going to have any clue what they're going to do. I don't think they're going to go into, generally they go into radio silence for about 2 weeks before their meeting. So I don't expect that we're going to hear a whole lot about what the Fed's going to be doing over the next couple of weeks, because their meeting is just basically 2 weeks away now. The 30-year Treasury, you'll notice that one had the biggest increase, 36.2 bips. So it went from 3.975 to 4.33. So that one, if you remember last week, the 30-year Treasury was inverted over the 10. That's no longer true. So the 10 and 30 have kind of righted themselves. So they're no longer inverted. So, and that's a good sign long-term for the economy. Nothing really to write home about, but it is a better sign for the economy that maybe the yield curve is trying to steepen, especially with the 2-year kind of coming down a little bit, the 10-year going up, the 30-year going up. The yield curve is trying to steepen, and that's generally what we want to see in economic news. 6-month T-bill over there on the left, 4.478. So it's still got a really high rate, as good a rate really as a 2-year Treasury. So you can tie your money up for 6 months and get basically the equivalent yield on a 2-year. So overall, economy is still struggling. We're starting to see more layoffs. We're starting to see, we are starting to see, by the way, some earnings come down. There was some really bad news today in some companies. Earnings, Snap was one. Verizon had some lousy numbers as well. So we are starting to see some impact from the slowing economy. I think we're going to see a little bit more of that for another month and a half. I think that's still going to put pressure on the stock market. And keep in mind, by the way, guys, that nothing's changed in terms of those two things that are going to kind of affect the stock market more. As interest rates and as the value of the U.S. dollar goes up, the dollar was up a little bit this week, not much, but it was. As the dollar and the bond yields go up, stock market's going to struggle. So on days like today where the interest rates did come down a little bit, that helps the stock market, where, and additionally the value of the dollar as well. So as those two things come down a little bit, that will help the stock market. As they continue to go up, it's going to make it harder for the stock market to keep going higher. So keep that in mind as you look about and say, hey, are we at a bottom yet in the market? I know everybody's trying to predict where the bottom is. We're not going to try to predict where the bottom is. We're just going to base it on what's going on in the economy and what's going on in the markets. So having said that, that's all I got for the week. Keep in mind, guys, if you have any questions about anything we've covered, give me a call or send me an email, and I'll be happy to answer it. By the way, just wanted to let you know, statements. I did finalize some statements. I had to update some files. I was waiting on I had some information on a stick disk, and I needed to get that updated. I have got that all updated now, so I can now get the statements out to you. So I'll start sending those out probably, this is Friday night, obviously. I'll start sending those out to you Saturday. So most of you should have your statement, your quarterly statement, either Saturday or Sunday. I'm not going to say that somebody might not get one until Monday or so, but certainly by Monday, everybody should have their statement in hand. So having said that, have a good night, folks, and we'll see you next week. Thanks.